Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 25th, 2008. Well, I'm just sitting here, guys, doing the video, and while I'm doing it, I'm listening to what's going on with this whole bailout fiasco, and I'll tell you, do these guys know how to keep the market on pins and needles or what? And I'm referring to the government and just this mess that we're in right now. And it is a royal mess. There's no doubt about it. I mean, today you basically had a rally in the markets, really starting at the open when I guess rumors leaked out that there was some deal agreement reached in principle. But as the day went on and the announcement came out, we went a little higher. Then it began to look like there were major sticking points on the deal, and the market started to sell off. Then rally, sell off, rally, sell off. Ultimately, it was a nice rally on Wall Street today, with the Dow up about 200 points, the Nasdaq up about 31, and the S&P up 23 and a third points. So really about 1.5 to 2% rallies across the board. But I mean, it's just unbelievable that this is going on right now. And I know a bunch of you guys out there, some of you guys out there understand the need for it. Some of you guys out there think it's ludicrous. I happen to be right in the middle. I think it's ludicrous, but unfortunately I think it's something that is going to have to be done. Otherwise we're talking depression. So I mean, I don't want to get into the rationale of it all, but it's a mess, and it's unbelievable that everyone got into this and that the country let itself get into this. You can look at the Wall Street, and many of you out there are probably saying, well, this is Wall Street's fault. Why do they do it? But unfortunately, it's not that easy. I mean, yes, Wall Street was responsible for lending the money. When they get this bailout, who's going to keep their jobs? A lot of the executives who might not be making $1 million after this year if their companies went under, and that's unfortunate too. It's a tough one, guys, but at the same time, you had people taking out mortgages over the past 5 years that couldn't pay it, and they should have done their due diligence and figured out that they couldn't pay them. So it's a double-edged sword any way we cut it, and it's unfortunate that the economy's going through this. It's unfortunate for those people out there that were non-events in it, meaning that they were people that paid their mortgages, they were people that don't have any debt out there. And they're going to basically bear the brunt of it as well, just like everyone else. But, we're in it as a country, I guess. You can look at it that way. And unfortunately, you gotta step up here. Now, you guys know how I feel. And we're looking at the ES chart here, by the way. And the futures are just down a little bit after hours here as this nonsense is going on with the government. And they're going back and forth on these deals. But, I mean, you can look at it in this way, guys. I'm a firm believer that this is just going to create another bubble in the long run that ultimately will have the house of cards tumble all the way down. And next time, there's not going to be a bailout that can help. At this point, Wall Street's failing. My fear is the government bails out. The government takes on debt, more debt. The world gets fed up with the debt and stops lending money to the U.S. or dumps the dollars on the open market. You have a collapse, and then at that point, there's nothing that can be done. Obviously, that's not going to happen recently or in the near future because you have the whole idea that the rest of the world is so reliant on us. They're not going to let that happen right now. But there will be a day and time when that's not the case, and that's what you have to worry about. When other countries out there become more self-sufficient, when China starts consuming its own goods, for instance, instead of relying on the U.S. Consumers to consume their goods. And that's what you got to look for in the future and be careful of. So I do want to keep that caution out there. Yes, in the near term, is this a Band-Aid that can go on us? Absolutely. The country, you get this bailout in there, it makes us all happy and cheerful and gives us that little adrenaline rush for another few years. Unfortunately, there's a downfall down the line, and we just have to be ready for it. And I always stress that. We're traders, and when we're investors, and we're swing traders. The investing side, you have to let go for now. Swing trading, day trading. Swing trading, day trading. You can't stay in the market for too long. You get hurt. We know that. You play bounces, you try to get involved in things here, and you do your best to just maneuver yourself in and out of the market in a safe manner. That's what you can do here. That's all I can say. But let's get into the market here. I'm going to keep watching the futures as we're trading after hours here at around 5:23 p.m. Eastern Time. And you can see that the market really right around here, guys. You're looking at the market dipping around 8 o'clock, 7 o'clock in the morning until about 8 o'clock. And then you start to get a nice push up, a little bit of a bullish flag pattern right down into multiple moving averages. We know we always like that pattern. And then really right here at 9:30, the market takes off to the upside. Obviously, someone let the cat out of the bag that there was an agreement reached before it was actually announced on TV later in the day. But you can see that nice little rally here, and the market stayed in a nice uptrend. Look at what you can do here. You can connect these lines, and you basically get what we like to call is a little positive bias here, a trend line. And notice this, let's start it here. You bounce up, bounce off of it. Notice the moving averages again as being key support. You rally up, then you actually get in a little bit of a tighter range here, even above the other range. So you're starting to trend in a second range here, which is fascinating in itself. So check that out. Ultimately, you break below that. Where's the next stop going to be? Obviously, the support line of the second trend line, which was right there, at which point you trend sideways to up following the trend line. Now, here's where the key is. You break below that trend line, and you go into the close below that trend line, right really on the 50 moving average here, which is the blue line. So there's a lot of craziness in this chart here, but you can see two trends within a trend, within a day, I should say, which is fascinating. We don't go over that a lot, but notice that, all right? You have one here, which is the bigger trend, and you can even draw a larger channel. This line to this bottom line is one channel, then you have another one forming within that channel, and that's just fascinating to look at. So keep that in mind. Volume was decent today. You had a little over 2.5 million contracts traded on the futures, which is average to above today, I would say. Nothing like we saw last week, though, and the week before when everything was going on. Nothing like that. But in any case, a solid day on Wall Street. Now, we had talked about the daily chart yesterday, and I want to go a couple over our continuation of our calls and just kind of discussing what the market's been doing. But we had talked yesterday on the daily chart of the SPY and the day before that as well at the 0.618 retracement level, which was right here. All right, and that's the beauty of it. It was right in this area here is 0.618. And the 0.618 you can get by easily calculating, all right, and let's take those lines away, the low, the difference between this point, and then 0.618 of that move and subtracting it from the upper range here, and you get basically a line right in this range, which is what we had come right down to in a 1, 2, 3 pullback, all right? So you had the gap up, 1, 2, 3, with yesterday being a pretty much pause day, a mixed day, and then you had the bounce off of it today. So you can see how the Fibonacci lines are very key in the market, and you need to continue to understand them and use them. All right, now I want to remind everyone, we're going to be going live on our new website tomorrow through the weekend. It'll take about 24 to 48 hours for everyone to view it. Some of you will see it right away, but we encourage you to come and check that new website out. It's just going to be fantastic. One thing I'm seeing here, folks, futures are ticking to the upside. I don't know if anything's going on yet. They're not racing up by any chance here, but they're up about 1.5 points after being down about 3 since I started the video. Make that up 2.25 now. So the market is moving up here after hours. And again, by tomorrow morning, this will be ancient history. You never know where it's going to be, but I'm just keeping you posted. So again, come check out the new website starting tomorrow, probably midday-ish our time, 12 p.m. Eastern time. It'll start to appear, and you guys will find it fascinating. The videos will be on that website. I already did the Hidden Gems, so there's going to be my favorite small cap pick out there on the Hidden Gems page, which is, I think, a fantastic play to keep watch of over the next 3 to 6 months as a big-time gainer. And Technical Tactic, which is a learning tool. You're going to learn basically every month. We're going to be doing a new key that we use in the market, that we use every day, swing trading and day trading, to utilize the market and make money. And we're going to do one of those a month. Just a lot of other stuff on that website. You guys will see it, though. Alright, so again, guys, keep in mind you had the Fibonacci retracement line here. You had a bounce up today. Generally, we would like the market to the upside, and we continue to. Remember, we called for a pullback based off of this. We got that pullback. It was a very sharp pullback. Sometimes you only go, 382 a Fibonacci number or 0.5, but here we actually, in 3 days, we were able to pull all the way back to a 0.618 retrace, at which point you're getting the bounce. We do happen to still favor a little to the upside, although I got to be honest, with this junk going on with the government, Wall Street's just not happy. I mean, it's kind of like a virus being in the system or something. Your body's fighting it. It doesn't know what to do. Is it trying to get better? Is it feeling down? Is it weak? Is it this? And it just keeps everything on edge, and it's just a mess. I mean, there's no reason, in my book, you don't want the government involved in the markets. The free markets work a certain way. They're supposed to work a certain way. I understand the banks are in trouble. They have to do what they're doing. Unfortunately, and I say unfortunately because we discussed as in the beginning of the video, it's screwing us in the long run, unfortunately. But what can you do? It's you want to fight it, yes, but it's either that or we deal with the problem now, or we bail them out now and deal with it later. Pick your poison kind of thing. In any case, I really try not to rant too much on these videos. My anger and disappointment with everything that's going on, but it's tough not to sometimes. Let's look at the NASDAQ today, and then I want to touch on research in motion. NASDAQ, again, had that same type of pullback after a rally up. Here's where we talked about going for a pullback, and notice how it went right into the 50 moving average here. Perfect pullback scenario. basically does a 0.618 retrace. You get a bounce today of about 31 points on the NASDAQ. Now, Research in Motion. Let's talk about Research in Motion. Research in Motion getting hammered after hours today. You can see this here trading. It closed at $97.50, down to 84 after hours. Notice the prints here going off at 84.04, $84. This was as low as 80 bucks at pretty much right after the announcement. This will put pressure on techs tomorrow, okay? And so just be aware that technology may be under a little bit of pressure tomorrow based on Research in Motion. I'm looking at Apple also. Apple selling off a little bit. A lot of the big techs out there are taking a little bit of a hit, so keep that in mind. Research in Motion, I'm not going to have time to go into support lines on that here, but if I go back far enough in the chart, I'm sure we could find out where it's probably going to come down to and where there'd be some good support. We'll do that once the new website's up. The videos will be much more in-depth. It'll give me more time. I'm very cut off here on these videos. I can do 11-minute videos. That's it. Otherwise, they don't go up on YouTube. Have a wonderful day, guys. Look for the new website starting tomorrow afternoon and tomorrow night. Have a wonderful day. Join the chat room, Swing Trade Alerts. We hope to have you. Take care. Bye.